Nvidia says it expects to take a $5.5 billion blow as the US clamps down on chip exports to China. The Trump administration will now require Nvidia to have a special license to export artificial intelligence chips, which the company says will cost it $5.5 billion. Semiconductors are the latest target in the US-China trade war, possibly along with critical minerals after President Trump ordered a probe into those imports on Tuesday. Well, Joachim Klement is head of strategy at Panmure Liberum. Joachim, what do these latest moves mean for the chip sector?
Well, I think they are more of a bellwether for the market overall, in the sense that nobody knows what to make of the tariff impact precisely. Nvidia now has to file for licenses for a chip that is specifically designed to meet the US guidelines for AI chips that can be sent to China. That's up in the air now. And this morning, ASML in Europe reported order intakes well below estimates, and at the same time said it had absolutely no way of finding out what the tariff impact will be.
Does that mean then that this sector will be particularly hard hit by tariffs? Are they going to mean a lot of bets on AI development that have really pushed these chip makers up have to be unwound?
Absolutely. The problem is that the Trump administration has long been threatening 25% tariffs or other significant tariffs on semiconductor imports in general. I think we will be in a situation where a lot of businesses are cutting back on major investments like data centers and like AI hardware.
Is this going to slow down the development of AI chips or turn it into an arms race that accelerates it?
I think the arms race is going to continue. It's already on between China and the US. That is likely to continue. Where things are going to change, I think, is in the profitability for the businesses, because with higher tariffs, there will be lower revenue growth and higher costs. And that means that effectively those shares will suffer throughout 2025.
A really significant amount of chip manufacturing, of course, takes place in Taiwan, where producers are stuck in the middle between the US and China. What could this mean for the Taiwanese chip makers?
Well, they're trying to find a way around all those tariffs because they're literally caught between a rock and a hard place. TSMC wants to move some of its manufacturing to the US and will likely do that in order to get some tariff relief from the Trump administration. However, it is a very difficult geopolitical situation, because if Taiwan would manufacture its most advanced chips in the US rather than in Taiwan, what is going to guarantee them that the US will protect Taiwan in case China starts to become more assertive?
More broadly, Joachim, what's the risk that the trade war also becomes a conflict in the financial markets? Will China start selling off its US treasuries, for example?
So far, we don't have any evidence that China did sell its US treasuries. What we do see, however, is that investors are becoming more and more reluctant to hold US treasuries because of the unreliability and the massive uncertainty coming out of the White House. China can use, in this environment, its treasury holdings to increase the run on US treasuries should we enter a panic. But for now, I think the sell-off in US treasuries is rather orderly, even though it is concerning.
That was Joachim Klement of Panmure Liberum. Don't forget, you can watch more videos on Reuters.com.